Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this particular Monday, and we are the 27th of March, 2017, just after 2:50 p.m. Central Standard Time. All right, interesting day. Today's the fallout from obviously the Trump situation where none of the health care got passed, and now people are questioning just what can he get done. So you're looking, by the way, we'll start with stock markets mostly lower, gold and silver up, in fact, silver quite strong. Dollar took a shellacking at the expense of a number of currencies that rallied against it. Crude oil had an ugly story in the sense that OPEC is still considering extending cuts, but now they're doing a study. What does that mean? They're buying time? I think that's what it is. And in the grain market, just take a look. Across the board, still continued selling pressure. So as we go to the soybean chart, this is the lowest low we've had now in quite a while as you go back on the weekly charts. You can come all the way back here, and this is the low basically of the year. So you're down to new lows for 2017, at least on the weekly charts. You can see how the daily chart has now dropped to the point of about 80 cents overall on a close-to-close basis. Now, that's not from the very peak because the market came down, then came back up. So I'm measuring it from that peak right on down here. As we take a look at a daily bar chart by itself, it's very hard to say anything except the market has fallen apart. As we come in and take a look at this chart with swing lines on it, you can see the pattern is one that we had a rally high right here that took out previous highs and then broke through those lows, which means this is a pretty much of what we'll call a vertical drop in the marketplace. It's not working in the sense of lower highs and lower lows, rather the higher high, lower low pattern. As we take a look, you're under the 18-day average of closes and under the 100, so that's both bearish. And once you had the bearish crossover where the 18 got under the 100, right back here at the beginning of March, it has never really looked back very much. The market has just fallen apart from that point. Now, today we finally got back down to, after this brief period earlier in the month, of hitting the lower Bollinger Band again and finding some traction against it. Didn't bounce very far, 2 cents off of it, but still getting a bit of traction. But it's being accompanied by this low, bearish, embedded slow stochastic. Now, people writing, what is a bearish slow stochastic? My advice is take my charting course, which I'll talk to you about in a minute, to figure that out, because I teach it in great detail. It's one of the most important patterns I know of on the charts, and when it locks in and goes sideways under 20 like you're getting, it generally means, and the word is generally, rallies in the market are brief and abbreviated, and the market likes to keep that pattern to the downside. When you go to the meal market, you have the same pattern, and you are falling apart in price. Now, you are 2 days under the lower Bollinger Bands right here, and I would expect that by the end of the week, you'll be to the right-hand side of it. But this is a powerful pattern. This market can fall further than people think, and I know tomorrow's Tuesday. A big break on a Monday often leads to a small reversal on Tuesdays. Would not surprise me. This is still saying it would be a selling opportunity. In the oil market, you fell apart. You got back under 32.11. So you're back to no pattern. You have a higher high. You have a lower low. That is not a trend. The market's under the 18-day average of closes. That's certainly downside bias. And momentum is pointing down. But you're not trending. You're just all over the board in that market. When we come to the corn market, you have the embedded reading again, which tells me price still going to be coming down. Now, we did have an outside day down today. What does that mean? An outside day down means you took out the previous day, in this case Friday's, high and then low, and you closed lower on the day. Therefore, fear would come to me if the market were to take out today's high of 358.25. Why? The odds of taking out a high once you have an outside day down within 2 trading sessions are very small. When it does happen, it often means that price and the 18-day average might make a run at each other. Countering that is a very bearish event that happened today. You had the 18-day average get under the 100. It's called a bearish crossover. I'm expecting new lows on this move because of that. In the wheat market, you might get that crossover here, where the 18 is now knocking on the door of the 100. You certainly have the pattern of lower highs, lower lows. That's bearish with the embedded reading. Everything's bearish about this chart. In the sugar market, well, you've had your move where you lost your embedded reading. Do you make your move tomorrow to get up to 1820? The odds favor that that's the game plan that the market's going to try. So generally speaking, and I'm looking back here to see if I can see one. When you lose an embedded reading, prices often make a run for the 18-day average of closes. And when you lose one on the top side, prices often make a run for the 18 on the downside. So we'll see if that's going to be the case. That is not reason to be bullish. There's nothing bullish on the chart but the fact that stochastics are calling for that rally. What could happen, though, is if you take out today's high, you could end up with higher lows, higher highs into the 1820 area, close then over 1820, and that would turn the chart bullish. So I'm giving you the what ifs on this. In the coffee market, you've gone from Bollinger Band high to Bollinger Band low in 4 trading sessions. Wouldn't surprise me if you make a run to the 18-day average. Are you trending? You're not. You have a higher high and a lower low in an oversold condition. In the cocoa market, you have a bullish embedded reading, and that should keep prices well bid on breaks. Now, big resistance begins at 21.91, which is the 100-day average, right on up to the upper Bollinger Band at 22.22. Unless the red line closes back under 80, I think the market stays well bid. Lose that, and I think the market gives up all that well bid and falls back to the 18-day average of closes. In the cotton market, I have allergies at this time of the year, so I'm holding sneezes. Lower highs, lower lows. We don't know what this is yet. So bearish, oversold. Difficult market to want to be short. Cattle market. On the close, you lost the embedded reading. See this reading under 77, at 77? Any readings under 80, take it out of that. Now, the only time the market can regain that power to the upside on the embedded part is tomorrow, day after it loses it. Has to be a strong day to have that. If it doesn't, it often leads to price in the 18-day average making a run for each other. The same thing in the feeder cattle. That's going on right now. And if feeders take out 130.87 with that combination, the odds strongly favor a run to the 18-day average of closes. In the hog market, I don't know what got into the market on Friday to have this monster rally. You do realize it got up as high as 78.25. We were all scratching our heads. Why? And it's down 500 points from there in but 2 trading sessions, that day and today. Unbelievable. I think it just proves to you that some of these meat markets are just run by these algo trades, and that's what I think is going on there. So when I put it together and try to talk to you about different things here, and that's what I do try to do, I love to teach. And, you know, years ago I created different charting courses. This is a completely different one than I've done prior to that. And I built this one electronic, which means no more DVDs, no more CDs. Everything's online for a number of reasons. Number one, it gives you the opportunity to own something at a lot less money. You know, when we make a DVD and we got to send it out, and we got to have a printing machine and do all those things and got to buy software so we can control, does it allow it to be passed around from computer to computer? It all costs money. So what I've been able to do electronically is take the cost of these courses down dramatically. I used to charge $500 for these courses years ago. Then I dropped into the $300 range, $200. Well, right now, my full course, 54 videos, and each video is about 8-9 minutes long. They teach you, they start off in PowerPoint method. From there, they walk into real charts. Now, admittedly, the chart action you're going to follow on our computer software, and the data will match up. You can go back, let's assume I did this at the beginning of the year, for example. It'll go back there and you can just match up your charting software. But we all know you want to follow what's going on now. So every morning, also included with the course, is my research. And in that research, I walk you through 40 charts every morning with a video, and you see what I'm doing, you're doing the same thing. Then about every 4 to 8 weeks, I hold a live webinar. I try to, at least. And there you come in and you can ask me questions. But I give you something else. Let's assume you have a question. Call me. I don't think you can buy other courses like this where you call the author and he's going to answer your questions and teach you what's going on and how to do it. The cost of this whole course, the charting software, the 54 videos, my research and my charting software costs by itself about $160. The whole package, $89.95. But if you use IRA 15, that's just IRA 15, take $15 off. So how do you go about doing this all? It's pretty simple. You can click right up here, and it'll take you right to the form. And there'll even be an FAQ page, facts page, where you can read about how it works and what's going on. And there's a short video there. You can go to our website at www.iraepstein.com. And that's the two ways. Or call our staff, 866-973-2077. So up here, if you're watching me on YouTube, you can call us. You can go to the website under the word education. Once you get to the website, take advantage. I am going to raise the price of the course again. And as I keep going up in price, you leave your opportunities behind you. Why do it? The best bet you can make is on who? On you. I'm Ira. You have a good day, and I'll see you tomorrow.